Okay. Wow, look at this. This is the first time I do it in our conference room. So let me just adjust the camera. I'm sorry. I know you guys just want to hear the news from me. In any case, the last time that I spoke to you all, I was mentioning about 5 key drivers, and I didn't want to make it too long of a video, but I'm going to talk about the last 5, right? The last 5 that you need to be aware of are fiscal policy, our corporate credit, yield curve. I'm sure you heard about this a lot. Technical indicators that we read in the market when we're doing trading, and investor sentiment. So on the fiscal policy, the implications for equities, whether they're negative, neutral, or positive. Fiscal policy right now is being looked at as a negative thing. The US pandemic era fiscal support that we went through total about 31% of the GDP, and moreover, $280 billion planned to make it stronger as the country's industrial base by investing in semiconductor production and research and development of new technologies that have been authorized by the current administration. We also, the US approved the 2022 Inflation Reduction Act, which is the IRA. Among other elements, it provides nearly $370 billion over the next 10 years for energy security and climate change projects. This is where Soriano Motors could do really good. Despite this initiative, near-term fiscal support has waned, and with the latest example being the end to a moratorium on student loan debt payments, yet amid ongoing negotiations, a bipartisan tax bill aims to retroactively enhance the child tax credit while liberalizing certain corporate tax provisions. Moreover, talks continue around federal spending plans for the fiscal year of 2024. And obviously, this has got a 2-tier stopgap measure to continue to fund the US government, which is set to expire on March 1st and March 8th. So that's coming up, the second date. In terms of the corporate credit, right, this is more positive. The US high yield and investment grade credit spreads continue to reflect lessened concern about an economic slowdown, but current levels remain above those registered in 2022. So that's something to look at. And then we have the famous yield curve. Negative. Inversions, yes. Whereby longer dated yields are below shorter dated ones. This exists in most sections across the US. The Treasury yield curve is what we're talking about. Include the Fed funds, the 3 months, 2-10 segments. The lessening of many of these inversions has paused. They actually stopped. But longer dated yields have recently declined relatively to those shorter dated. Overall, the Treasury market suggests a higher probability of a recession in the United States. What does that mean? We'll talk about recession next time. Technical indicators, this is really neutral. So the S&P 500 remains about its 200-day moving average, which is also in an uptrend. If you're trading, you know this is true. Measures of market breadth, such as the percentage of the New York Stock Exchange stocks closing all above their 200-day moving average, and the cumulative advance versus decline indicator, are basically gradually improving from relative weakness. The Chicago Board Options Exchange, the CBOE, however, volatility index, the VIX, remains near pre-pandemic levels. So that's good. That's really good. And then finally, the investor sentiment. According to the American Association of Individual Investors, optimism in the outlook dominates less than pessimism. However, cash levels in institutional portfolios signal neutral according to our global research fund manager survey. And this is why the bull and bear market indicator is also flashing a neutral signal at 6.1. So hope this helps. This finalizes basically all the 5 points, 10 points total, but the 5 points today about how the market is moving and behaving and what we're expecting for the year 2024. But you know what to do. Corporate@sorianogroup.com, Soriano Motors, Soriano Group, Soriano Fashion, anything you want, you can reach out to us and send your questions, comments, controversies, whatever works. Peace, love, be good.